Alright guys, it's time to do an update video on my overall stock market portfolio, and all credit goes out to you guys down in the comment section that have been begging me to do this video for a long time now. I'm sorry it took so long, but this video is for you. Okay, now as always, the way that we do this is I don't give out a ton of my personal information because some of my friends and family watch my videos. I don't want them knowing all of my finances. And on top of that, I don't want viewers copying every single thing I do. So I try to be at least a little bit vague and not give out too much information. But as a sort of compromise, what I will be sharing with you guys is every single stock that I own, what percentage of my portfolio each one makes up, and I will also show you a screenshot of how much I'm either up or down on each position as a overall kind of total percentage. But we got a lot of stocks to run through. I think it's like 17 now in my overall portfolio. So let's go ahead and get started here. I'm just gonna give a very quick, very short explanation as to why I own each stock, because we kind of have to do this like rapid fire style because there's just too many stocks. But I hope you guys enjoyed the video. And if you guys want to see more kind of personal videos like this in the future, make sure you hit the like button, and it also really helps the channel and it means a lot to me. But we got a lot to cover, so let's go ahead and jump straight into this. Okay, now as you guys probably know, I invest through 3 different platforms, and those are E-Trade, Robinhood, and M1 Finance. But to keep things simple in the video, when I show you a stock that I own, I'll just show you the platform or the account that has the largest position in that individual stock. So even if I own it in multiple accounts, I'm just going to show you whichever one has the largest position. I'll show you how much I'm either up or down as a percentage. Now, I also just want to mention that I'm up a lot on a lot of these stocks, but it's not that I'm like some amazing stock market guru or anything like that. I'm just a very kind of basic fundamental long-term investor. So I tend to hold my stocks very long-term, and that's why as a percentage, it might look like I'm up a lot on a stock, but it's not, again, it's not because I'm some kind of genius or anything. I just follow the very basic principles of long-term investing. And when you do that, you'll usually end up with stocks that are either, up a lot or, possibly down a lot, but usually up a lot. And I also do most of my buying when stocks are going down. And for example, during the stock market crash of this year, I did a lot of new buying, and I picked up a lot of stocks at like the rock bottom prices. So that's also why I'm up a lot. So again, it's not that I'm, it's not like I know any kind of secret. I'm just a regular investor like you guys, and I just stick to my fundamental long-term investing principles, and I do the majority of my buying when stocks are going down, and then I kind of ride the wave as they're going up. All right, so starting things off here, and by the way, I'm going to be rounding every single stock to a whole percentage point so that we just have like an even 100% for the overall portfolio. So I'm doing some rounding with these positions, but kicking things off with the absolute largest stock in my entire portfolio at a whopping 17%, that's going to be Microsoft, ticker symbol MSFT, which I'm currently up by over 55% on. And it's very easy to explain why I own such a large position in Microsoft. It's just a very stable and reliable foundational stock that I can build the rest of my portfolio around. They consistently grow sales every year, doing a massive more than $140 billion in sales last year alone, on top of over $40 billion in net profit. It helps them pay a nice dividend as well that is admittedly tiny but has a very small payout ratio, a double-digit growth rate, and 16 years of consecutive growth, so it'll likely keep growing in the future. And no worries about their business. They have the second largest cloud platform in the world that is still getting larger every year at unbelievable growth rates. It's also tied into their AI ambitions, their artificial intelligence ambitions, and I think Microsoft will be one of the clear leaders in AI in the future. They have a lot of growth opportunities with new acquisitions like GitHub, LinkedIn, and possibly even TikTok. We'll have to see how that plays out. And of course, they'll always have dominance with Windows and Office, while their gaming business has a very real opportunity to compete at the highest level with PlayStation with their upcoming Xbox Series X and their Netflix-like gaming service in Xbox Game Pass. Add it all up, and I'll probably be carrying my Microsoft position well into retirement, as it's really the glue that kind of holds my entire portfolio together. Now, even though I completely disagree with this, many people consider Microsoft to be kind of a boring company because they're already so like massively large and may not see enough growth to satisfy those really growth hungry investors. Well, for that, and by the way, I disagree with that because Microsoft does have nice growth, but For that, I've got the almighty Tesla at around 15% of my portfolio, and that position is up almost 650%, which is pretty insane to think about, but obviously I could not be happier with that performance. But like I said, Tesla is one of my growth stocks, and nothing shows off that growth power more than by just looking at what they're expected to do this year. While most other companies, or auto companies I should say, are getting absolutely destroyed, Tesla is actually still managing to put up sales growth of over 20%, while Ford and GM are expected to crash by around 20% each, for example. That's a huge difference. Meanwhile, the Model Y has already released to tackle the best-selling car segment in the world in crossover SUVs, and the Cybertruck is so exciting that I'm actually planning to buy one myself, and I've never even been into trucks. Needless to say, I'll be riding this wave all throughout the rise of electric vehicles and especially autonomous driving robotaxi services as well. Okay, moving on to stock number 3. That's going to be one of my absolute favorites in Amazon, ticker symbol AMZN, at about 12% of my portfolio, which I'm currently up by over 75% on. And this is really like a combination of like the last two stocks in that it's just as reliable and foundational as Microsoft, but also comes with similarly exciting growth potential like Tesla. In fact, at a time when our economy is basically in like a depression, depending on what factors you're looking at, like unemployment standards and things like that, Amazon is still managing to put up insane growth this year of over 30% and still put up another 18% the year after as well, topping over $400 billion in a single year. That is insane to be doing that that large of numbers and still be growing. But like I said, they're not just about growth. With the largest cloud market share in Amazon Web Services and the largest e-commerce market share at 44% in the US, with Walmart in second place only doing 7%, Amazon is a very stable and reliable stock that I can easily hold long term and build my portfolio around. And rounding out the foundational stocks of my portfolio, the kind of four here that make up over 50% of it, we've got Visa at number 4. That is a ticker symbol V at about 8% of my portfolio, which I'm currently up over 40% on. And this is just a foundational and very reliable core position for me. It's a stock that I've always wanted to badly own for a very long time, but I was never able to buy it because it rarely dips and I just never really had that opportunity. And as you guys know, I love doing most of my buying when stocks are going down. But because they finally had that really big drop earlier in the year when the market crashed, I went ahead and just bought very heavy into it. And you guys probably remember those videos. I kept telling you guys, the stock that I'm buying the most heavy right now during this crash is Visa. I'm buying over and over. I kept saying that. But again, a stock that rarely experiences any volatility at all. And, why should it? With 60% credit and debit card market share, Visa is a very dominant leader. MasterCard follows in second place at 30%, while American Express is all the way down at less than 9%. And despite being a leader, Visa still puts up very solid financials year after year in terms of growth and everything else. And you can see that on this chart here. And that helps them pay a very small but very high growth dividend that I'll still enjoy collecting for many years to come. It's not the reason I own it, but it's a nice little bonus. Okay, now moving on to stock number 5. You knew this one would be high up on the list, and that is of course AT&T, ticker symbol T, at about 7% of my portfolio, which I'm only up on by less than 3%. So I'm kind of close to break even like on the actual stock itself. And this is really a stock that has struggled over the years. But the great thing about this position is that I only really need it for that fat dividend. At my cost basis, I actually get a dividend yield of over 7%, which is really monstrous for me. And that also comes with a dividend growth history of over 35 years in a row. That's incredible. Unfortunately, their net earnings have struggled for a while now, given the fact that people have cut the cable cord and gotten rid of legacy telephone landlines, but their first place dominance in wireless services at 40% market share, along with 5G now launching, and with their new HBO Max streaming service, should only help them recoup some of those losses and hopefully stay afloat. It's a risky stock, and therefore I try to manage it strategically so that it doesn't get too large in my overall portfolio, but at a 7% dividend yield and a very high free cash flow every single year, I just feel extremely compelled to own it. All right, coming in at number 7, that's going to be Disney stock, ticker symbol DIS, at about 6% of my portfolio. And it used to be much higher, usually around the second or third largest, but I've since cashed in a lot of those profits and sold most of my Robinhood position, which I've covered in previous videos. But now my largest position is only 6% worth, and that's in my E-Trade account, which I mostly purchased during the crash earlier this year, and that's helped me be up by almost 50%. Although I have to admit that I'm not feeling too great about this one here in the short term, as their stock has climbed by a huge amount from their rock bottom lows, like close to double in fact, and it's only down less than 10% this year, despite many of their hotels and resorts being shut down for months, and movie theaters everywhere basically being shut down, which obviously hurts Disney as they're the #1 box office market share leader. So I can't even imagine how much money they're going to lose from the fallout of this whole global health issue, not to mention that they were even forced to cut their dividend as a result. But I continue to hold them because of their amazingly popular brands and IPs, along with, of course, their new Disney Plus streaming service that has seen subscriber numbers skyrocket thanks to the lockdowns. Okay, now moving on to stock number 7, we've got Alibaba, ticker symbol BABA, at about 6% of my portfolio, and I'm currently up 50% on that position. And as the reason for why I own this one, it's really pretty simple. It's just a Chinese version of Amazon. So I basically take my Amazon position and I just kind of throw it into the Chinese market, and I end up with Alibaba. So why wouldn't I want to own that? Sales growth continues to be sky high at gigantic rates every year, sometimes as high as even 50% or more, despite them already doing over 500 billion yuan last year alone. They're very profitable, and just like Amazon, they're a market leader in e-commerce with over half the Chinese markets, and they even have a more cloud market share in Asia than both Amazon and Microsoft's. Obviously, it's a Chinese stock, and that makes it very risky for reasons that we've covered in a lot of previous videos, but at around 6% of my portfolio, I like to hold this one long term, and I feel comfortable with it. If it was a US company, to be honest, I'd probably be buying like at least double that amount. Okay, now the next stock, however, is an American company, and it also happens to be my one and only biotech stock in my entire portfolio, and that is of course AbbVie. Ticker symbol is ABBV, at about 5% of my portfolio, which I'm up on by over 40%. However, the overall stocking is not even the reason why I bought this stock in the first place. I mostly bought it at these two crash levels here, and the reason why is because those prices gave me a dividend yield of over 7%. At today's higher prices, the dividend yield is smaller at about 5%, but it's still very high, is a pretty high yield there, and very high growth at over 20%, and the growth history is actually closer to 50 years in a row because they were spun off from Abbott Laboratories. They do have some issues with patent protections expiring in the coming years, but the recent acquisition of Allergan, along with a promising pipeline of new drugs, should only help them sustain their very high cash flows and help them keep paying that dividend, which again is the main reason why I own it in the first place. Okay, now stock number 9 is one of my biggest regrets in life, but not because I own it, but rather because I didn't buy more of it when I obviously had the chance. And that is of course Nvidia, ticker symbol NVDA, one of my absolute favorite tech stocks, who is famous for making graphics chips that power many different things. Anyway, my position is up over 130%. So with the stock having run up by so much already, especially recently as it's up by almost 100% this year alone and basically trading at a record high, I just can't convince myself to add any more at these levels, at these higher levels. But with huge opportunities in the future of high performance computing and artificial intelligence, autonomous driving, cloud computing, and data centers, and even smart cities and the Internet of Things, which I think Nvidia will play a very big role in, it's just definitely a very long-term stock that I plan to own for a very long time. By the way, they do also pay a dividend, but it's so incredibly tiny at just about 0.1% at today's prices that it's not really even worth talking about. Okay, now moving on to stock number 10. That, however, is basically the only reason I own it, speaking of the dividend, and that is of course 3M, ticker symbol MMM, at about 4% of my portfolio, which I'm currently up by over 25% on in my M1 Finance account. And 3M is the company behind popular household brands like Post-it notes and Scotch tape, but also supplies industrial, automotive, and even healthcare products, including masks, which, by the way, I think may have saved them this year from taking a much bigger hit than they otherwise would take during a global recession. Still, the stock has been falling for a couple years now, mostly due to a lack of innovation coupled with macroeconomic weakness, but I luckily was able to use the 2020 crash to finally buy into the stock and pick up that sweet dividend that still yields over 3.5% even at today's higher prices, has a double-digit growth rate, and has grown every single year for over 60 years in a row, which is almost impossible for any other company to match. Again, struggling times right now, but cash flows are decent, and I think over the long term they'll be able to kind of turn things around. So I'll continue holding it for that dividend. Now, there's actually a dividend stock that I like even more than 3M, and that is PepsiCo, ticker symbol PEP, at stock number 11, at about the same percentage of my portfolio, and I'm currently up on it by almost 20%. And I really wanted to buy a lot more of this one. Actually, I wanted to buy it for a very long time, but when it crashed this year, I said, okay, that's a good enough dip. I'm buying in, finally buying in, and I tried to buy it as fast as I could to build it into a very large position, but unfortunately it rebounded very quickly, and I think at the time I was buying a lot more of Visa, so I just wasn't able to pick up as many shares of PepsiCo as I wanted. But of course, PepsiCo is a fantastic dividend stock. Even at these higher levels, it's still yielding almost 3% with a massive almost 50 years of consecutive growth. And what I love about PepsiCo is how well diversified they are, thanks to not only selling a wide variety of drinks, but also solid food snacks like their Frito-Lay brands, all of which has helped them not only survive the current health crisis, but also keep gigantic sales stable over the years. And I'm confident that I will be able to collect this dividend well into retirement. Okay, now moving on to stock number 12, we've got one of my absolute favorite tech stocks, very similar to like Nvidia, for example, in terms of why I own it in my portfolio as a very long-term kind of tech growth stock, and that is Tencent, ticker symbol TCEHY, at about 4% of my portfolio, and I'm currently up by around 55% on that position, thanks to the fact that I bought it when it was falling right along with many other Chinese stocks, and then I rode the wave up to where it is today. Probably not buying more at today's levels, but what I love about Tencent is that they're not only a huge internet-based tech company out in China, but they're also a very dominant worldwide company as well. In fact, they actually generate more video game revenue than any other company in the world, including PlayStation, Sony, Xbox's Microsoft, and Switch's Nintendo. On top of that, they have the largest messaging app in China with over 1 billion monthly users, and they work in a number of other markets too, like social media, entertainment, e-commerce, and even artificial intelligence and cloud computing. It's a very high growth tech stock that I think will only get larger in the future, and I plan to hold it for a very long time. Okay, now coming in at number 13, this is my only bank stock in my entire portfolio, and that is JPMorgan Chase, ticker symbol JPM, at just about 3% of my portfolio, which I am up by over 15% on. And there's really not a whole lot of complex reasons for why I own it. I've actually had it for years now and added more during the 2020 crash when it fell to as little as the $70 range, because financial stocks tend to get crushed during global recessions, and hence why I like to keep it small in my portfolio at only around 3%. But I like owning it for the diversity of having a financial stock, and I initially chose this one because they are, in my opinion, one of the best, if not the best run bank in maybe the world, but certainly in the United States, with tons of market share at second place in 2018, much better financial performance than most other peers, with solid revenue growth on top of stable profits, and of course a great dividend that still yields over 3.5% with solid growth metrics to go along with it. Of course, banks tend to cut their dividends during financial crisis, and we'll have to see if that happens to JPMorgan Chase right now. But over the long term, I like my cost basis and I enjoy holding it for the diversity and the strong leadership. So I don't plan on selling it despite the uncertainty and elevated risk during this global health crisis. Okay, and that leaves us with the last piece of the portfolio, and that is my four little tiny stocks that together make up the last 4% of my portfolio, but each of these make up only less than 1% each. So they're very tiny positions, either because they're highly speculative or risky, or just because I recently started buying them and haven't had the chance to build them up into larger positions yet. But because the video is running a bit long at this point, I'm just going to do a very rapid fire on them to finish up the video. So first up, we have Baidu, another Chinese stock sort of known as the Google of China, very big play on internet tech, artificial intelligence, cloud computing, and even autonomous driving. And I am currently up on it by about 11%. I bought it at around $100 a share, and I was hoping it would fall below that again so I could buy a lot more, but instead it climbed, and now I'm just kind of waiting for another dip. Next up, we have Delta Airlines, which of course crashed right along with the entire industry because of the global health issue ruining travel demand, and it currently still sits down over 50% year to date. So I was able to get a very low cost basis as a result, averaging my way down very quickly with this one, and I'm currently up 37% from those rock bottom lows. But full disclosure, I did have a smaller loss in my Robinhood account, so I don't really consider this as much of a win since it's such a tiny position anyway as well, but I'm really just kind of holding it to see how much more it will climb once things get back to normal in the world. So it's mostly just like a little spec stock for me, not very significant. And just like Delta, Carnival is a similar little spec stock for me. The story is literally the same. It looks like I'm up a huge amount there, but that's just from the rock bottom price that I averaged down on, and my Robinhood account actually had a small loss on it as well, so I don't really consider any of this as like a big win or a big loss. It's just an insignificant little like tiny spec play. What is not a spec stock though is a dividend ETF that I hope to build into a larger position over time, and that is the Vanguard High Yield Dividend ETF that I just bought this past month, and I'm currently up about 4% on it, but I really hold it for the dividend that still yields over 3.5%, and I hope to make this into a bigger position over time. Okay, so there you have it, guys. What do you think about my portfolio? Are there any stocks you like? Are there any stocks that you hate? Any stocks that you would replace with something else? Let me know down in the comments section. I'll try to respond to as many comments as I can. But thank you so much for watching and for all the support. It really means a lot to me. And I will catch you guys in the next one. Stay safe out there. Take care. Bye-bye.